Hot picks today, we're looking at semiconductors, and our guest has a company called Microchip Technology as a top pick. We're joined by Chris Danely, Managing Director, Semiconductor Lead Analyst at Citi. Chris, thank you very much indeed for joining us.
Thanks for having me, Andrew.
It's kind of a generic name, isn't it? Microchip Technology, the symbol MCHP. Can you remind us what is their role in the industry and what attracts you to them?
Sure. So I have a nickname for them. I just call them the Chipper. It's a little more, I guess, zippy than Microchip. So Microchip's primary product, about 2/3 of their business, is a microcontroller. And what a microcontroller is it's like a simplified microprocessor for common everyday applications. You don't need $100 Intel or AMD chip in your coffee maker or your e-bike or your monitor. These things are ubiquitous. It's about a $50 billion market, so it's one of the bigger markets out there in semiconductors. And Microchip has the best microcontroller out there.
So these would be used in sort of lower tech products. We're not talking about AI, for example.
No. They have a little bit of exposure to AI, and in particular robotics, which was one of the big themes from CES, the trade show that I was at this year. But I would say that they're probably 40% of their business is the industrial market, 25% of their business is the automotive market. There's probably $100 to $150 of microcontroller content in, say, a high-end car. And then in terms of factory automation, there's tons of microcontrollers. Like an HVAC system. So whatever tells your temperature gauge to communicate back to the blower to heat it or cool it, or in a car where you have all these different sensors and a fuel gauge or a tire pressure monitor. All those things need a microcontroller. They only cost about $1.25 or $1.50 on average, but it only costs Microchip 50 to 60 cents to make it. So it's a very profitable and, like I said before, a very ubiquitous business, but it's certainly not sexy by any stretch of the imagination.
Texas Instruments, they've been around for a long time. And remind us what devices they make and where you see growth.
Yeah, so it's interesting. These two chips are very complementary. So Texas Instruments' main product is analog and high-end analog. So analog is very similar to a microcontroller, right? It's cost, $1, $2. Anything you plug into the wall, anything that uses electricity is going to have analog there, where you convert like where you plug something into the wall, that energy, or the electricity that comes in there has to be converted to whatever the device is. So Texas Instruments is the largest analog company out there. The analog market is I think it's $150 billion. It's a huge market. And for every dollar of microcontroller content that Microchip has, for example, you have $1.50 of analog content that goes around that. These are two of the highest profitability products out there, not just in semis, but in the world. So one of the reasons why we're so positive on Microchip and Texas Instruments is both of their margins are very depressed. Their gross margins have gone down 10 to 15 points because we just got out of a downturn. So naturally, when we have an upturn, they should go up 10 to 15 points. And at the peak, you should have mid-60s gross margins, 40s operating margins. For Microchip, you should have 70% gross margin, 50% operating margin for Texas Instruments. So not only are these two companies very profitable, but you also have a ton, in fact, the most upside and the most earnings growth in the entire semiconductor sector. Everybody loves AI, right? We love AI too. To me, it's almost kind of boring, right? We like Broadcom, we like NVIDIA, we like Micron, all these AI plays. But in our opinion, we just put out our 2026 preview. We think that the biggest surprise this year is going to be an analog upturn, analog and microcontroller upturn, which did not have a very good year last year. So that's a change we see in semiconductors this year.
Can we squeeze in your take on Broadcom, though? We've only got about a minute and a half. Sorry about that. What does Broadcom have going for us right now?
Sure. So this is interesting. So we all know that Broadcom is the second largest AI semiconductor company out there. You've obviously got NVIDIA, which is the big kahuna, Broadcom just below them. What Broadcom does is, unlike NVIDIA that does a GPU or a graphics chip that they sell to everybody, Broadcom does custom chips where they work with the company like Google, for example, which is 2/3 of their revenue. They work with the company to do that. They're also engaged with OpenAI, with Meta, with other companies. Now, the big deal here is that Google has been able to sell their sort of custom chip that Broadcom manufactures. They're starting to sell that to different companies. So Anthropic, which is a very sort of famous up and coming AI company, they're buying it. We've also heard, we put this in print, that we believe that Amazon and Microsoft, not only are they doing their own chips, not only are they buying from NVIDIA, but they're also going to buy some of the Google chips. So we think that this is a large growth driver for Broadcom, and that Google is able to sell they call it a TPU, or a tensor processing unit. They're able to sell their proprietary chip to other companies out there. We think that's the next leg of growth for Broadcom. Broadcom also is one of the most profitable semiconductor companies out there. Their gross margins are in the 75% range. It's just, it's pretty amazing. It's how profitable these guys are.
Chris, we'll have to leave it there. That was great. You gave us two relatively under-observed names in chips that we don't talk about much at all. Thank you very much indeed. Really appreciate it. Chris Danely of Citi.